All right, good morning, everybody. So we made it through CPI and we got the gap close that I had talked about yesterday, and now we get a chance to do it all again. Here are the spot gamma levels, SPX and ES. SPY, QQQ, and the NQ. I had someone ask about these levels when it comes to the futures. And I mean, yeah, they provide a little context, but I gotta say I use them more when I'm trading options on the SPX, SPY, and QQQ, and I use them less on the futures. It's not that they don't have any value, really. It's just I've already got key levels that I focus on. And if we think about what these levels represent, all right, options trades and all the things that go with that, options on the futures, you have to believe are going to be less impactful to the futures than options on SPX or options on SPY, right? So I'm not saying that they're not valuable or that I don't care where the levels are at. I just don't hold them in such a high regard, right? Those 0-day moves where we see the market, go from extreme lows to extreme highs in a single day, and it just keeps running farther and farther and farther than we ever thought it could to finish really, really high up on a day. That's a 0-day effect of options, and it uses these levels 100%. And on a day like that, I really revisit where these levels are at. But on just any old day-to-day basis, when it comes to the futures, I don't really lift these up that high. My own 2 cents. So hopefully you caught your screenshot of those. And depending on which broker you're using, you might not have to import that data every day. On Thinkorswim, the levels are already there, they're just in an indicator. But on TradingView, you have to bring those levels in every day. All right. So I was going through yesterday on TradingView and found, I'm sure it's been there for a while, but it seems like they've really updated their market page. So, we normally go to FX Street and Finance Juice to see what's on the economic agenda for the day. TradingView kind of married those two products and gives you an anticipated impact for the economic event and then gives you the list of events. I still say you want to check multiple places because nothing is going to give you everything, right? It's just the way it is. It's why one place might give you some economic events and then another place will give you other economic events. You put the two together and you got a pretty good idea of what you've got on the agenda for the day. But they also have the major world indices, and we review those in the morning to see what happened around the world. So for an example, we can see Asia closed, or at least Hong Kong closed down on the day, but not by much, mostly flat. And Japan closed up on the day, not by much, mostly flat. So out of Asia, really not much. It's going to be more with Europe, right? And this surprise data that came out of Europe this morning. So there's going to be press conferences, and then I'm sure through the day today, they're going to have to come out and kind of walk the market through this biggest upward revision in the history of the BOE. And then we've got our own Fed speakers today. Kashkari and Waller are going to be speaking 8:45 and 10:15. Right now, there should be a press conference going on with Bank of England Governor Bailey. And then at 8 o'clock, I'm not even going to try to pronounce that name, but another European Central Bank speaker or central bank member will be speaking. So we had jobless claims today. Waller speaking additional auctions. And tonight, money supply in Japan. I know that, most of us aren't going to be trading in the after hours of the Globex tonight, but really think about how that's going to affect things for tomorrow if you're doing any swing trading. This is the TradingView economic calendar that I was talking about a little bit ago. They use kind of like a cell phone meter to imply how high the anticipated impact is going to be. And you can see that PPI is maxed out for what we could see once we get the data this morning. Just like with CPI yesterday, traders are going to really want to get this information before they make more informed decisions. And right now the argument is, are they going to hike another time? When I was looking around trying to figure out what does the market do when the Fed quits raising rates? Well, just because they quit raising rates doesn't mean that they're automatically going to start cutting rates. But generally the quote is, sell the market after the last raise. Everybody is really comfortable on the idea that we've had our last raise, but it's not official yet. They haven't announced that yet. So you don't want to just run out and sell the market just because we all have this understanding that it's very likely the last raise. And after getting the data that we've got this week, we're not necessarily so confident that that was the last raise. Earlier this week, we had talked about keeping our eye on the next FOMC date and if there was going to be a hike or not. This was sitting at 20 the last time we looked at it, and now it's at 5. So now we have a 95% likelihood that the Fed is going to pause for the June FOMC. When the data comes through today with the CPI or with the PPI follow-up to CPI yesterday, we're going to expect this to really stay unchanged. I don't think it's going to go to 99 until we get closer to June 14. But what we don't want to see is that it starts going in the other direction. If they start unwinding this, then they're going to either price in a cut, which would take it from 5 down to 475, or they're going to start pricing in a hike, which would take us from 5 to 5.25. They really didn't like that print yesterday. So, a hike seems more likely than a cut, honestly. But it really just does seem that we've had our last raise. And if that's true, then we're absolutely going to see this market sell off in the next or throughout this quarter. Let's say it that way. So there's Hong Kong with that inside day breakout and recovery back up into yesterday's range. Notice that they tagged the high of the previous day and broke out below and still managed to come back in. So a whole lot of running around, but got nothing done. And then Japan being inside that really small day from yesterday is really impressive, especially when you think about this candle pattern here. And the anticipated follow through from that. So yeah, we just got to see how it plays out. But inside day and IX10 at this point, but I wouldn't focus on the IX10 until tomorrow if we happen to yet again close within this very tight range, not looking at the May 9. For Europe right now, even with the surprise data and everything going on, they're still inside day. They wicked through the top, couldn't keep it. And right now, it's very likely that they're going to challenge the bottom. But, it's only nearly 1 o'clock there. They got plenty of time. And we'll see if they can change this up a little bit. We did get some big moves after CPI on the dollar. So, that 101 was a level of concern that we were focused on. Now it's going to be more of that 102.5 to 103. We're not even at 102 yet, but if we continue this drive to the upside, that's going to be what's in focus. So you can see how that big candle that we kept marked from May 3 was the range top, and we're IX10 through all of that, but we still need the breakout. The breakout alone will be the alert trigger. And then at that point, we really want to keep our eye on that 102.5 and 103. We're still focused on an inside day breakout or a resolution of this range. So until we get it and it's in first relationship with the ES, this breaking up into 102.5, getting into 103, we're going to be expecting the S&P to break, say, 4,000, get into 3950, maybe even a little lower than that, right? So the more this drives upward, the more we want to keep our eye on the S&P and its downside move. Thought I had that logged in already. I use 2 computers at once, and I normally keep my brokers separated onto different machines so I don't bog it down. But come on, load already, slacker. Ah. All right, volumes at 104. They're not waiting on PPI to make decisions. We can already see that they are engaging in the market, very likely because of that surprise over in Europe. Caught them off sides, and they're making decisions on that without even waiting for PPI. But we can see jobs data, and then we start getting into auctions. We got tips, and then we have really close on the front end, the 3-month, and really far out, the 52-week. So, I mean, that's not really far out, right? We got, considering like the 10-year and the 30-year, 52-week, a 1 year isn't really that far out, but 3-month, 1 year, 6-month, 4-week, and the 30-year bond. 30-year bond is a big deal. So 1 o'clock today, that's going to be a big one. I know it seems like I'm the only one that ever talks about these auctions, but they're worth paying attention to. So when it comes to the 0-day trades today, you're probably going to want to wait until after we get that 30-year auction to make a decision about any of your out of the money 0-day spreads, right? All right, we did get a move through the kill zone, but really I would say the kill zone move was muted. The real move came when Europe got that surprise announcement. If you trade in the Globex, you will really want to be listening to news. I like Bloomberg when I'm trading at night or way early in the morning. They have Bloomberg Asia, and it's just like listening to news in America. It'll be like 6 o'clock at night here. It's 6 a.m. in Asia, and they'll be talking about companies that are getting ready to report earnings. You get the mood of the market, kind of get an idea of what's going on over there. And it really gives you a more informed decision on how to trade in the evening, right? You're not caught off sides when you get big moves like this. So this move, I'm sure, ran over a lot of people who were sitting there wondering what the heck just happened, having no idea that there was some economic data coming out of Europe and that there was some surprise information that ran everybody over. Don't be that guy, right? We had an MDP. We no longer do. We just tagged it. So that's off the table. We don't have to worry about it. And we have a very large range now due to yesterday's whipsaw in both directions. I do want to point out, right? We had talked about this yesterday about getting that really big push at the beginning and then looking for it to get reset. The ES reset that early in the day, all things considered. The NASDAQ, it took that thing, into the later part of the day before it finally got all the way back down there and reset that level. When I talk about if you lose more often than you win, quit doing the hard stuff and start doing the easy stuff. A trade like that, that's the easy stuff. All we had to do is wait for it to top out, catch a ride to the downside, and as long as it didn't come back through your original entry point and you left your stop in place, you were good to go. You run that thing all the way back down without ever taking any more heat than your original entry position. Those are the kind of trades that you can size up where you don't need the whole move anyways. You've already got high conviction in what direction it's going. 5 points, 10 contracts, you're done. I don't see a market maker move this morning, so it's one more thing to make us believe that they're not really too worried about PPI. So the elevated volume and the lack of market maker move, plus already having seen work getting done this morning, really implies that they're saying screw PPI, let's just get it done, make decisions anyways. 10-day, 30-minute volume profile, we're above the POC. That will become a magnet, and it very likely will act as some form of support like it did before back here. We got near it, and we just came right on down to it and then hugged it, gravitated around it. That's our expectation right now. So 41.36 or so, there's a cog line at 41.31. So anything in that area, very likely going to be a magnet, a little bit of gravity. If we break down below the 41.32 cog line, there's really nothing down here structurally that we would anticipate to catch the market or to hold us at all. And we can see the moves that we've seen, or we can see the moves that we've had through that area and how fast they were. There was really nothing there. The thing is, we hit something, right? And whatever we hit, it very likely wasn't on the ES. And it's the same spot we hit something else the other day, where I pointed out, hey, we bounced on something. You can look at the ES all you want and try to identify what we hit. I don't think you're going to find it on the ES. A little while ago, I was talking about the dollar and its inverse relationship with the ES and watching the dollar get above, say, 102.5, just for an example. So whatever caused this bounce, suppose it was the dollar hitting resistance and falling down really fast, and that would turn this around and spike it up really fast. I don't know it was the dollar. I'm just giving you an example of what could have been the thing that turned this around. Either way, whatever turned it around, we don't know that it's going to be there the next time we revisit this level. There's no volume down here. There's no structural level from the volume profile to make us believe that we're going to bounce off of this zone again and go back up. With that being said, if we break this low at the cog line 4111, we're very likely going to go below 4,000 fast. Call it an air pocket of risk, right? There's really nothing down here. So something to keep your eye on, right, is that 4111 cog line and how strong it is. We can see when we make fast moves down into that zone, traders are ready to defend it and run it right back up again. Five by five, we do have a VPOC from yesterday, but it's close to getting taken out this morning. Kind of, I guess, on one hand, that's kind of nice because, you know, most of the time we mark these and then we don't get to see them again and they get hit in the overnight hours, and it just kind of feels like we're spinning our wheels and wasting time. But this morning, 41.43 and a tick, you could just make it 41.43 flat. You don't need the tick. That's the VPOC right now. Just keep in mind, this isn't support. They don't act as resistance. That's not what they do, right? They're just showing you where the greatest amount of volume was from yesterday. You do with it what you will, right? The greatest amount of volume from yesterday. It doesn't have keys to the kingdom. It's no magic potion. It's just the spot where the greatest amount of volume was traded. Generally, that implies it was the spot where the firms or the institutions were the happiest with price and that they were trading with each other. In none of that does it imply support or resistance. It doesn't even imply liquidity, right? As old liquidity, sure, but not anything like, is there an iceberg down here that we're going to hit? Just because there was old volume there yesterday, I wouldn't anticipate volume being there now. Cool thing is you can see it on the dome. I've got Jigsaw up on my other computer. I can't share across the computers with a, app wise. But if I look at 41.43 on Jigsaw, which allows me to scroll down a lot farther than a 10-tick typical broker's dome, 41.43 doesn't have anything, but 41.44 has 3 times the volume. Maybe 2 times the volume. And it's not necessarily volume, it's orders sitting on the dome. So there is a lot of traders sitting at 41.44. I guess I could have turned on Bookmap. We could have looked at it through that, but either way, good enough. So we are getting our rebound. Keep in mind that you don't see a gap, but I would consider this a gap. I would also consider this shocking. The data came out here with this really big outsized bar. That's my bet, right? And then it digested it and started moving. So at the very least, we're going to expect 41.63. Just remember, it doesn't have to necessarily get all the way back up there, right? It can just attempt to close the gap and get close, like the NASDAQ did yesterday. The NASDAQ technically never really filled that gap. It missed it by a little bit. 13,258 is where the gap happened on the NASDAQ, and we made it down to 13,262 and a half. Come on, man. What is that, 4 points? It's close enough. Yeah, you like it. Just tell me you were able to monetize it. Make a house payment with that. All right, so we got the bonds moving this morning. This is the ZB. Keep in mind the ZB has an auction today at 1 o'clock. So seeing it wake up and really start rocking and rolling here, that's just the start. And we don't want to see it get out of control. It is inverse of the 10-year right now. Notice I said right now, it's not always going to be that way because we're talking the 30-year and then the 10-year. They're not the same thing. But we can see the effects right now. We got the 10-year headed to the downside steeply, sharply, suddenly, and we've got bonds headed to the upside. Once we get into RTH, you're better off not using the /10-year. Just go ahead and use TNX, and TLT instead of using ZB and ZN. This dichotomy that we've got going on right now between finance and tech is really what's causing a lot of traders grief. But because of that same situation, we've had some really great trades. So, you can't complain, I guess. Today, it's going to be really important to watch the 10-year, the 2-year as well. If you have something like TradingView, the 2-year is going to move a lot more than the 10, right? And it's more responsive. It kind of gives you a deeper feel of what's going on the front end. So if you can watch the 2, I would say do that. But bonds and yields today and the dollar. The VIX, I mean, I think we've all really kind of expressed our lack of satisfaction with the VIX right now. So you can keep an eye on it. I would never say to turn data off. I just don't see how the VIX is really going to offer much insight, right? Not compared to bonds and yields and the dollar. It's going to give you a lot more insight into your trading today than the VIX. If you don't want to use the VIX, and I don't blame you, there is SVXY. The pre-market is trash, so I wouldn't recommend trying to use it after hours. But in the daytime, yeah, this is really helpful, especially the idea of using it on the daily. So don't even go into the intraday with it. Just look at where we're at on the day, if we're inside day breakout or not, by how much, how far has it moved, and really keep your eye on where's resistance and support. Because as this thing runs up into a resistance area and gets rejected and starts to fall really fast, the S&P and the NASDAQ are about to fall really fast. It bounces off support and begins to run hard to the upside. So is the S&P and the NASDAQ about to run to the upside. Why? I mean, hey, I don't know, right? Some of this stuff is like turning on the TV. I don't know why it works when you push the button. I just know it works when you push the button. So SVXY to replace VIX, just to kind of help you out with your intraday trades, right? It's better than nothing. I wouldn't use it as a standalone tool either, right? It's not like you only want to look at that and not look at anything else. It's a bad idea. The other day I rebuilt the weighted AD and I used semiconductors for the names inside of it. I haven't really shared it out yet because I don't know what it's going to do yet. It's a new thing, never had anything like it, and don't know what the signals are going to be. Right. So once I get it figured out a little bit, I will be more than happy to share it. I don't sell indicators. So, it's kind of like that's not my thing. As long as I'm not breaking anybody's copyright laws to give something away, I'm just giving it away. I don't care. And this is mine. I made it, so I can give it away. But we got to see how it looks, how it works, how it functions. Right now, I took the components of the SMH. The SMH is an ETF. That means it's a basket of stocks. So I opened up the basket, took the names out, and put them in here. I took the weights that the SMH uses, and I used those for the weights in this. Now we just need to see how it functions a little bit. Right now, so far, um, it's not really that much different than the other one. And I'm thinking that there might be something with the code that I'm missing. And that's one of the reasons I don't want to share it yet. But there is hope on the horizon. So, we'll see what we do when we get there. All right, regional banks are leading to the downside this morning, down 2%. Behind that, we have Bitcoin, energy, gold, and more energy. The rest of these are in the zeros, which means it didn't move enough to even hit the scan. On the upside, we've got nat gas, KWEB, and bonds. So let's start with gold first. Got a pretty nice push, kind of coming back up off of those lows from yesterday. When we have gold going to the upside, one of the first things you want to do is check out US dollar Japan. It should be going down. Yeah, like that. The thing is, seeing it down like that, you would anticipate that gold would be up more than it is. I mean, it's up this morning, don't get me wrong, but I'm feeling a little like, why didn't it get more attention? Why is gold not moving more than it has this morning? On the one side of that, the good thing is, if you're looking to trade precious metals, gold, silver, or miners, and it hasn't yet made a big move, well, jump in before it makes the move. Looking for an inside day breakout on GLD with 192 as your long side opportunity. I mean, that's a pretty far push, but we are testing against a weekly pivot point, and we do have last week's high to deal with. So 191.36 last week's high. It's this point here from last Thursday. Maybe GDX, right? Yeah, I mean, this GDX took a much greater beatdown yesterday. And I mean, sure, it's off of the lows this morning, but we're still underneath where we closed yesterday. And seeing US dollar Japan fall as much as it did, why aren't these up more this morning? So if you do decide to go long in any of these, just approach with a little bit of caution because I would have expected more. Right? What they keep saying, thought you'd be bigger. Yeah, well, I thought this move would have been more. The funny thing is silver's been outperforming gold. So at the very least, we should be seeing silver make, an exaggerated move. Nope. Yeah. This is a very steep, very fast move here in US dollar Japan. And we're going to be coming down into that 133. This pivot point is setting us up for a bounce, a very beautiful double bottom classic bounce, but it has to happen first. A classic double bottom is going to shoot through the low and go lower than the previous low. That's what it's supposed to do, right? It's a bear trap. It's supposed to suck all the bears in and make them think we're going to continue to go lower. So watch this for a move down to 133.64. That'd be the ADR half. And then a bounce. And on that bounce, remember, it's a bear trap. The recovery on the other side of it should be very swift, very fast, aggressive even. And that's going to be gold headed to the downside, silver headed to the downside, miners. So be careful with that, right? On that bounce. And if we start ripping back up hard and fast, those precious metals are going to get gut punched. If we don't bounce there and we keep going down, game on for your long trades in gold, silver, and miners. You like it? Yeah, you like it. So that covers the gold stuff. Let's check KWeb constituents. So China ETF, China Internet ETF, we're still inside day. We got nothing, right? But we closed midday, and then we got a little shake and bake off the bottom and near the top. And now we're still just kind of holding. We need to get the heck out of this box. So it's up this morning, but I'm not convinced of anything at this point. It's going to have to do a lot more to even get me interested. We do have this much bigger TRB setup on the daily. But if you look at it on the weekly, you can see why I'm skeptical, right? We had these nice recoveries on the last 2 weeks when we got below that $27 level. They just bid it right back up. And we are below that level right now. But notice in those 2 previous weeks, the lows were nearly perfect. We broke that this week. So sure, we're back above it, and we could continue to recover and try to test that TRB setup, but I don't believe it. Right? It's got to show me first. So keep your eye on KWeb for an inside day breakout. We get a topside breakout. BABA, Baidu, PD, JDD, JD, PDD. Ran through those too quick. Those should all get a nice push. One of or any of, right? I don't think they're necessarily equal in stature. So I wouldn't approach them that way, right? Don't treat them like they're all the same. That's not what we want. The ice. That's the one we want. NYSE FANG Plus Index. This is what makes up the NY FANG. You can see that they have Snowflake now and micro devices. One of the names that they took off of here is one of those China ADRs. Can't remember which one, but one of them. So we've got an IX10 in Baidu. That might be a nicer setup out of the whole list of them. Outside bar on PDD, so engulfing candle here. and not really a good one either. But with PDD, we already did get an inside day breakout. Now it just needs to hold. So at least, you know, it kind of got a good start there. Market maker move with an additional 1.75%. JD certainly getting more attention than all the others. Inside day breakout, it stuck the move. And right now, I would be looking for a retest of that 37. That might be the best short of the day right there. We get back up to 37 and it fails to break out, that thing's going down like a brick in water. But if it breaks out, just double that bar, whatever it is. We could even be a little conservative and not take the whole move, just take only the bar itself. 38.3. I mean, that's not bad. From 37 to 38.3, it's $1.30. We got a market maker move of $2.50. Yeah. I like JD out of the others. So that handles the K-Web. We talked about gold and silver. That kind of leaves us with semiconductors. Since I'm not really trusting SMH right now, better to do it by hand. Just come in and kind of walk through them. NVIDIA, you know, we still haven't even managed to get an inside day breakout yet. But from where we closed to where we are now, we are up, and it is threatening a topside breakout. If we get that, we still have 292 to deal with, and round numbers are psychological levels in the market. They do become a lot more important. So that would be a level that I would focus on. You can see how price reacted when we got up to that level before. And all of this is inside day breakout or IX10, and we'd be looking to get out of that, right? But if we did, 294, easy. And with a swing to 300, 301, really. Just got to get it. All right, so MU, you know, we were testing these lows, and this morning, sure, it's gapped up, but in no way is this even implying any sort of love on semiconductors this morning. Just there's nothing here that I would even remotely focus on for any kind of bullish move, because it has too much work to do, right? Just to get back up to where we opened yesterday, let alone get a breakout of yesterday and then expand beyond that to the upside. Looking at the daily and the weekly, we do have this really great wedge, sure, but that's a big picture play, right? It's like a longer term trade. So for a day trade at MU, isn't offering us any information about semiconductors that I would take to kind of get some insight on the day. AMD at least has some volume to it this morning. Really big day from yesterday. We're still inside it. We really don't have anything yet other than a very clear Globex peak. I mean, that thing is crystal clear compared to some of the other charts we've looked at this morning. So if we're still underneath that as we come into the RTH, that's going to be the number one thing to get past, obviously, and then challenge yesterday's high. Inside day breakout, all of yesterday for our measurement will get us right up into that 102. Notice that $100 psychological level, it's a round number, but it's also $100. So round numbers are always something you want to watch for. 100 is even more important than just a regular round number. So if it was 200, 300, 500, 100 is more important or more impactful psychologically to the market. It's just the way it is, right? I don't know. So that's going to be a really big deal to get through. And even if we do get through it, look at all of this back here, implying that we're not going to go with this real nice expansion to 104 and 108. We're not going to be able to do that and keep it. There's too much liquidity up there. It's going to take at least one test of that, at least one, before we can get through, right? That long and the short, I don't see any way that we can get through there in the first try. If we do, it'll be because of news or something. So this morning in the pre-market, if we're looking at semiconductors trying to figure out, do we have their attention and are they going to help us with a bullish move today? So far, I mean, they're bid up, but they're not leading the pack for sure. So we got NVIDIA and AMD kind of weak, right? Squishy. Technical term. And we got nothing from TSM. It kind of argues against it. It'll be nice when we have SMH that we can just lean on again with some conviction, but I don't trust it. So doing it by hand is a little slower, but whatever, it gets it done. And Bitcoin also being down this morning. So when we talk about like topping patterns and trash, the daily chart on Bitcoin, not only does it have this really, really big head and shoulders, but it's ugly as hell. And it's just this massive topping pattern. It's like a wad of chewed up bubble gum. That's not helpful. So they have been defending that 27 level really strong. If we do break down outside of this candle from 5-8, then 27 round number is going to be what I focus on. Now, it's not like I'm trading Bitcoin futures, right? You have to have a massive, massive account to be able to trade Bitcoin futures. One contract, $66,000 buying power reduction. Now, granted, if you were day trading, it'd be a quarter of that size, but that's per contract. There's 5 ticks and $25 a tick. So what, 125 per point? Using that much buying power for $125 a point? Come on, man. We could trade oil, right? So not talking about trading this thing, but you really want to pay attention to what's going on with this since it has more than a 70% correlation with the NASDAQ. So if this hits liquidity and begins to rally like a mad demon, the NASDAQ very likely is going to begin to rally too. Kind of want to know that, right? That would be useful information, especially when we're coming into a low and we're trying to decide, is that low going to be bought up? Are we buying weakness or are we going to sell into weakness? So this can kind of highlight that. We're a little squishy today. Let's look for that 27.3 as our line in the sand. With a break of that, we'll focus on the round number 27. And we're going to be looking for a failure to bounce this time. We already made the double bottom and we already made the bear trap. And we've already rallied up from that trap, right? The trap was sprung. We had that. It's done. So if we come back down here again, it won't be a double bottom bear trap. It'll very likely be a continuation to the downside. Seven minutes to PPI. Looks like the market doesn't care. It's getting its work done anyways. All right, so there's a double bottom here. And it's not a classic one, but you can see how they front run it. They got in before it actually made it down there and bid it back up. This is not the double bottom that I like, right? This is not the droid you're looking for. Nerd. So is it tradable? Yeah, I mean, take what you can get, but conviction? I'd rather have the double bottom go a little deeper. So a lot of these are going to tie in together. Emerging markets, K-Web, gold, those are all going to come from the Asian markets, whether it's China or Japan. And really going to want to watch the US dollar Japan pair if you're going to be messing around with gold, silver, miners. For emerging markets, EEM, keep your eye on K-Web, kind of give you a little bit of a heads up. That'd be your JD, PDD, Baidu, Baba, right? That constituency. And semiconductors, there's no push there this morning. So if we were looking for flow and for any kind of excitement or exuberance, no, I'm not seeing any in there. So we're going to kind of want to let that ride. Finance is down. We didn't really go look at any financials. They got their face kicked yesterday. And it didn't matter. We're not talking like regional banks. This is Citi. And credit cards too, right? Like American Express. So for a good rally in the S&P, in the NASDAQ, we don't have to have it, but we rally better when we have tech and finance working together as a team. When we have this division or split between the FANG names ripping to the upside while we have financials dropping hard to the downside, we get a real screwed up market, and it makes it hard to trade, especially with any conviction. So when they start doing the same thing and they're working as a team, we get much cleaner moves in the market. That rally off of the low yesterday, you can see where the NASDAQ got its gap closed and really started to rip, because that's what this move was right there. It's when the NASDAQ cleared that gap close from the economic move yesterday of CPI. And on that push, we had finance and tech both working together. And you see the kind of move we have, right? That's amazing. That was an awesome run back up. But that's when they were working as a team. When we were dropping to the downside, they weren't working as a team. And look how choppy and nasty that was. Tradable, sure. Yeah, but I'd rather have this run in blue than this mix of blue and red to the downside. All right, Econ's going to be here in a minute. Everybody be careful, be safe, have a good day. Watch the clock. Keep your eye on the financials today. I'll see y'all tomorrow.